Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 29th of June. So the big headline at the moment is the increase in coronavirus infections around the globe, and that's starting to have an impact on the either easing of lockdowns or actually prompting new lockdowns in certain parts of Europe and in certain parts of the UK even as well. So at the moment, what we've seen is quite a sell-off coming off those highs from the optimism that things would get back to normal fairly quickly, and this later sort of route of negative news may well start to have an impact in some of those markets. Let's have a look at the Dow here and take a look at where the structure of the market is at the moment. Now, recently, last week, the market managed to break underneath that key 25,000 level. And I think as long as the market stays underneath 25, that's going to be the big picture here for the market. If we have a look at this on the weekly chart, you can see that the market has sold off from 27,400, which was a structure level up here. Couldn't get through this one. We're now at some interesting price points at the moment, as I say, but underneath that key 25,000 level. And the next big level that we have on these higher timeframes, on these macro pictures, really here is around 24,000 here. You can see that's quite a support structure in there. And it doesn't look that far away in the context of these markets. If we have a look at the daily time frame, we can see that the market's already in a structured short trend at the moment. We've also got sort of bearish indicators as well, indicating that the momentum is to the short side. Now, we've got a bit of a structure here around 24,700, where you can see the market's tested a few times as support and resistance. Underneath here sees us into that next support level around 24,000, so it's not that far away. If we take a look a little bit closer and come down to the 240 chart, which is the 4-hour time frame, we can see this detail in a bit more detail. Now, the market had been chopping around in this sort of sideways price action for some time over the past few weeks. It's, as I say, it managed to break underneath the 25,000 level, that key 25,000 level in late trade on Friday. And now the market's sort of sitting underneath that there again this morning. Now, early trade this morning, the market has rallied up. It's tested 25,000 again, and as you can see, it's sold off that area too. If we just take a look just underneath price at the moment, there is another sort of mild level in here. It's not a strong level, and I've got it grayed out, but it's 24,850. You can see that there's a bit of support and resistance, not the strongest, but a bit of support and resistance in there. I think if we see a break below this low, that also takes it below the open of this week. That's a very bearish sign, and that could start to see a move here to the short side. And as you see, we've got the key 24,000 level down here. In between there, we've got 24,500 again, which is a very strong support and resistance structure on this time frame. But if you look in between there, there's not a great deal of structure in between 24,850 and 24,500. So indicating that that window could close sort of fairly easily. So the way we're looking things at the moment is if we see rejections off the 25,000 level and the market can't get above this price point, then we'll be looking for weakness underneath 24,850 down towards the 25,500 and 24,000. If, of course, the market does get above 25,000, then we've got that resistance level above price where the market really did find support here over the past couple of weeks, and that's 25,200. And that's still within the context of the short trend here. So looking at weaker opportunities here on the US equity markets, in particular the Dow. Now, if we come across to the commodity markets, one market that we're taking a look at here is oil. If we have a look at this here from the weekly perspective, oil, of course, had the dramatic fall into negative pricing just a few weeks ago. It's now managed to recover quite a bit of this sort of pricing right the way up to around the sort of $40 level. Now at the moment here we're starting to see quite a bit of significant weakness coming into the oil market around that price point. If we take a look at it on the daily time frame, we can see that from the daily the strength of this trend is already starting to peter out. So we've got I mark a level in here. You can see from the sort of gap down here, the market has just brought, or the price has just come back to the same sort of price point around the $40 level. We've then got two tests, so we've got a double top up here, a double top with divergence, and you can see the indicators here showing significant weakness on the second test up here towards that $40 level. So the strength of this long trend on the daily time frame is starting to look decisively weak at this moment in time. Now, if we come down to the 4-hour time frame, we can see the structure here of the market. We can see the rollover here in price, and we've got a couple of levels in here. So around 37.35, you can see that there's been significant support in this market around there. Already on the 4-hour time frame, we're already in the structure of a short trend at the moment. So getting underneath this level does open the market up for a continuation to the short side. And the next sort of structure point we see here on this 4-hour time frame is down to around the sort of 34.50 area, where again we've seen significant support and resistance, and that's a fair distance there in price for a continuation to the short side. Already momentum is looking weak on this market as we speak at the moment too. So looking at oil prices short underneath that sort of 37.35 price point. Now, when we come to currency markets, one that we're keeping an eye on here is cable. And again, I'm going to come really up to the higher time frames here on cable, just to put some perspective in the structure of the market. We can see that broadly here for quite a long period of time, the market's been within the context of a short trend. We've had lower highs, significant lower highs, and the sort of area where we're seeing a bottom forming here is around the 120 area, where the market's tested multiple times before. Now, again, at this current month candle, which has only got a few days left to run, is looking decisively bearish at this moment in time. You can see that prices have tried to rally up, they've failed to hold up there, and now they're sort of coming right the way down to the bottom of the monthly range. If we take a look at this down then on the weekly chart, we can see that again on the weekly, we can see our 120 level. We can see the significance a little bit more clearly here with that. And again, just where market is at the moment, there is a bit of support and resistance. Again, you can see that structure there within the market. Now, of course, underneath that doesn't leave an awful lot of space on the weekly chart, or an awful lot of structure in the weekly chart for a move down to retest that 120 price point. Now, again, if we come down a little bit lower, you can see on the daily time frame that we've got a little bit more detail here. So around 123, you can see that we've got this bit of a level through there. Underneath there, 122 is also another sort of midway support and resistance structure, back down towards the 120 level. Already, of course, we're in the context of a short trend on these slightly lower time frames as well. So if we bring this down to the 4-hour time frame and look at time frames that are a little bit more tradable, you can see that on the 4-hour we're already in the context of a short trend. We can see that we've got significant resistance. If I just zoom out at 124, which is above price, 123, which is the level that we were looking at on those higher time frames, is the next sort of structure that we see here in the market. So not a great deal of support or resistance in the way for, or resisting the market continuing its trend down towards that 123 price point. So this is what we're looking for in cable. We're looking for short opportunities to the short side here, targeting 123 to start with, then we have 122.50, and then down towards that 122 area. So there's a few opportunities there that we're keeping an eye on in the trading room going into the start of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.